Hi there, welcome to Grain TV. I'm Kevin McNew. It's Wednesday, November 9th, and what a day it's been. Let's take a look at Grain Hedge's trading platform and see where we closed. In Chicago, corn losing 13 cents a bushel, beans losing 19, but off as much as 25 on the day before recovering some of those losses, and wheat in Chicago losing 8. What a day it's been. First of all, obviously the Trump election results that were surprising and shocking to the market, those had dramatic impacts. First of all, overnight it was a down night in equities in global markets overall and in the US dollar, but by the time we got into the morning trade session, fears and anxiety started to abate and people started to focus on what it might mean to have Trump as president and what those policies might bring. And by the end of the trade session in equities, we actually are in the green or in positive territory. So overall, it's been a topsy-turvy day with a great deal of uncertainty still yet to bear. But at least the markets did manage to recover. In grains, obviously we had that impact overnight, but also we had added on to that the significance of a U.S. crop report that we'll talk about here in a minute. But let's focus a little bit on some of the implications for agriculture with Trump being president. I think there's a lot yet to be discerned from what this will mean in terms of ag policy or specifically in terms of trade. But obviously the biggest concern in trade relations is what this means for Mexico. And Mexico is by and large one of our big clients in terms of corn, also in terms of meat. When we look at corn exports this year in particular, Mexico has been white hot in terms of buying U.S. corn. So far, year to date, exports are up 7.1 million metric tons. And that compares to 5.3 million metric tons for the same period last year. So if corn exports get hit or if meat exports get hit, those are certainly negative for an already sort of dismal outlook in the grains and meat sectors of the U.S. economy. So that's still yet to be ferreted out, but obviously it's something that can cause some concern as we move forward. Let's take a look at what USDA supply and demand numbers threw at us, and unfortunately these numbers were much higher on the production side than most analysts had expected. Starting first with corn, yield coming in at the high end, very high end of analyst expectations, 175.3, well above 173.2 that was expected. Production also coming in at the high end, 15.23 billion bushels versus 15.04. Those numbers were certainly shocking to the trade. We had thought that there might actually be a little bit of a dip in corn yield, but in reality, when USDA threw the numbers at us, they were actually much higher than expected. Likewise, soybean yields, which were expected to be higher, came in even better than expected. Yields at 52.5 versus 52.0, and production coming in at 4.36. Now, in terms of corn, let's take a look at where these corn yields grew the most between October and November. And top on the list in terms of big changes was North Dakota, going from a USDA yield in October of 137 to a November forecast of 154. That's a 17 bushel an acre increase, massive change in yield there. Also, Western Corn Belt states like Minnesota, like South Dakota, even Iowa got an uptick in yield. So overall, the Western Corn Belt certainly seeing a big jump in yields, and that's not terribly surprising when we see what's been happening to basis. Basis on the Eastern Corn Belt has been recovering after we've gotten past the harvest season, but so far Western Corn Belt has continued to be dogged by low basis, suggesting that yields there are much better than expected. Let's go back now to supply and demand information from USDA and take a look at what this meant for carryout projections. And not surprising, soybeans getting a big jump in carryout, going up to 480 million bushels versus 420 expected in last October's report of 395. So big yields weren't enough to, basically we did not see enough of a cut or enough of an increase in exports, only a 25 million bushel increase in exports versus nearly 100 million bushel increase in production. So we saw a carryout rally sharply. Corn also going higher, not quite as high as the high end of analyst expectations, and wheat only moving up 5 million bushels from last month. Now, when we think about what potentially comes down the road as we get to the final numbers in January, keep in mind that USDA, in years when they found big numbers between October and November, they still tend to have more arsenal in terms of higher yield. So these may not be the worst yield numbers or the highest yield numbers we'll see from USDA as we move forward. So still more yet to come, but the news certainly today was negative. Let's take a look at the action in January beans. Obviously, a lot of factors driving not only the bean market, but also the global markets in the last 24 hours. Starting overnight, we saw a big V down after the election results were coming in, all the way up until about 11:30 Central Time, when we bottomed out and managed to move higher into the opening session of this morning. But once we got that crop report, then obviously it was all selling for an intense 30-minute period here from the grain hedge trading platform. This is a 30-minute bar chart. The good news is we did manage to hold on to that 983 mark. We've been talking about that for the last week or so. When we look at the daily bar chart from Grain Hedge's trading platform, 983 continues to be support. That managed to stay intact even with the big sell-off today. We did get down to that level. We did bounce off of it a little bit here. I'm not sure it's going to hold because these numbers are certainly negative and much higher than expected. So it'll be interesting to see as we go forward for the rest of this week whether we'll retest that 983 and start to penetrate into new low territory in this move. Tomorrow we've got USDA's export sales numbers looking for 1.7 to 2.0 million metric tons of beans, 1.1 to 1.4 in corn, 300 to 500 in wheat. Hopefully those numbers will provide some stimulus to the upside, but right now everything on the table from USDA was certainly negative and sets a bearish tone as we move forward from here. That's all we've got for today on Grain TV. As always, visit us online at grainhedge.com and take a demo of our trading platform to see how we can help you in your own grain marketing situation. As a Grain Hedge trading client, you'll get our technical alerts email first thing every trading day. Technical Alerts is a powerful system that generates quality trading opportunities. Each trading opportunity shows a chart and analysis providing clear price targets and risk potential. Technical Alerts look at historical chart formations and compare the current environment to the past to form concrete trading recommendations. The commodities covered by Technical Alerts includes grains, livestock, crude oil, currencies, bonds, and metals. Start your trading day with the most powerful insight into market direction and improve your trading today. Sign up at grainhedge.com to become a client.